welcome to another edition of Who Moved the Market. You know me, I'm Surabhi Upadhyay, and you probably know him as well. He is Mangalam Maloo. So you might have heard the headlines from yesterday because this has been the talk of town for many, many months, and it's finally happened. First of all, Mangalam, congratulations, because you told us, I think a couple of weeks in advance, that this demerger of ITC's hotels business is going to happen. And it finally did. Yesterday we got the news.
Yeah, I mean, it's like telling you a bit of a source or a secret sauce. What happened basically was that every time there would be a rumor on ITC's hotel demerger, which was practically every month for the last 3 years or so, I would try and check with some people I would know in the company, and no one would say that things are happening. But this time around, I tried and checked with someone I knew in the company on this rumor, and they said, we'll let you know what's happening. And I was like, hey, there's a bit of a difference in what they've been saying in the last 3 years or so. So is something really happening? I dug a little deep and I found out maybe that things would happen, and turned out that they did happen. So it was basically, telling you, I told you so for 3 years, and finally getting it right, maybe a broken clock, which is right at least twice in a day.
Well, not bad at all, because it's something that the market was definitely watching out for. So we got the news yesterday. And since yesterday, the reaction to ITC has been slightly perplexing, maybe for some, maybe not for others.
Yeah.
And we'll talk about both sides of that argument as we go on. So what happened yesterday, we got this news and the stock started falling. It was down almost 3% yesterday when we closed out. It was down almost 3% today. It's recovered slightly as we bring this conversation to you. But the fact is, ITC has cooled off and there's no further immediate upside rally, this mad rush anticipation rally. So the why later, Mangalam, maybe let's just tell people what the demerger sort of structure looks like and what the company's actually announced.
Well, so the company has not announced too much because the board meeting still hasn't happened. What they've announced is that the board intends to approve the demerger of their hotel business when it meets on August 14. So modalities of the demerger, the entire structure, the swap ratios, etc., most likely to be revealed post August 14th itself. But what is it that we know so far? That the hotel business of the company will basically be put into a wholly owned subsidiary.
Sure.
And of that wholly owned subsidiary, 40% will be owned by ITC
itself,
and 60% they will give it to all the shareholders by way of a swap ratio or something. So basically, if you are an ITC shareholder today, you will get access to the hotel business. 60% of the hotel business comes to you in the form of shares that the company gives to you.
Direct shares of this new entity.
And the remaining 40%, you hold it via your holding in ITC itself.
Correct.
Yes.
And that's where I started thinking immediately the moment this press release was out that, hey, okay, it's not as simple and clean as some of the other demergers we've seen in the past. I mean, the recent case in point being Jio Financial, very simple. You merge the entire business, demerge the entire business off, and then you get shares in a certain swap ratio that's determined depending on the value. Here, it's a dual structure. If I want to own ITC's hotel business, like you said, I need to hold on to the new shares of this new entity and shares of ITC.
Yeah.
The converse is also true, that an ITC shareholder who doesn't have any interest in the hotels business, wants to maybe look at only, cigarettes or whatever else, they will still have some exposure because of this dual structure?
That is true, but there are reasons for that. The first biggest reason for that is all the other demergers that have happened so far. You haven't had a company which has a large shareholder ascribed or identified as a promoter entity. So all the large shareholders of ITC, none of them are ascribed as promoters. If you go onto the ITC BSE website shareholding, you will see that the promoters hold 0% because no shareholder is identified as a promoter. No, they are all big, but they have not been identified as promoters. That's a regulation thing. So were they to go ahead and put a 100% vertical demerger where every shareholder of ITC gets a share of ITC hotels, then there's an ownership issue. Like you said, those who want to own ITC for the tobacco business, and we have a large, tobacco company, an international tobacco company owning ITC shares, a large chunk of that as well. What if they wanted to just suddenly sell out? So they would basically then, the stock becomes vulnerable to be sold to some other hotel company. ITC is a strong brand, and of which, ITC wouldn't have the management control. So to retain the management control, they had to have some stake in the company. What is that some stake? That could have been 51%, that could have been more than 51%, that could have been less than 51%. Why is it less than 51%? Because if it's more than 51%, then it becomes a subsidiary, and in the consolidated results of ITC,
it doesn't really make any difference, right?
It doesn't make a difference because the balance sheet would have to have all their assets, and then there would be a minority, minority investment sort of adjustment in their balance sheet. So for their balance sheet to not reflect the assets of the hotel company, they had to be less than 51%. But for them to have enough ownership in the company to have management control, it had to be a substantial chunk. So it has to be 40%. Additionally, we don't know who owns the land on which the hotels are built, whether it's under ITC Hotels or whether it's owned by ITC itself. If it moves from ITC to ITC Hotels, then who pays the stamp duty? So there are a lot of regulatory issues, a lot of structures. So I'm sure that a lot of these investment bankers, their advisors, the CAs would have been working and burning the midnight oil for many years to try and find out what is the best balance to do this. Amidst all of this, you have to have enough float in the public's hands to actually independently value the hotel business. So you have to give them 60%. So 40-60, that is what explains this sort of structure, as against everyone saying, oh, you know, it's very simple to say, why don't you just clean it off like that? Because obviously there are a lot of synergies in ITC's other businesses with their hotel business as well. Case in point, the company has been saying multiple times, if we have a great chef from any of our hotel business suggesting a product or suggesting a recipe, that suddenly their FMCG business goes for scale. That's incredible, right? You have one of the best chefs in ITC hotel business suggesting a chip recipe which sells for bingo, and suddenly it's a 1,000-2,000 crore business. So there are a lot of synergies.
Okay, interlinkages, and probably they're not fully done yet, so it's not a complete de-link or demerger.
Yes.
And we'll probably have more answers. There's an analyst meet also that's coming up, right? I guess
there is an analyst meet on the 27th at 4:30. Okay. So a lot of the analysts will put questions to that. But you know, now on to what is it that people should do with ITC. The first thing is that, you know, the demerger, so to say, news is out of the way. So all those who were buying for a big bang demerger announcement are getting out of the way, which is why the stock has corrected from what, 500 rupees to around 450 odd rupees. But remember, 1 month before that, the stock was at 440 itself, and it had rallied all the way up to 500 in hope of this announcement. So that frothy trade is undone. Secondly, the 40% thing allows, you know, people to now ascribe a holding company discount to their hotel business. So as a result of which, there would be about 2-3 rupees which will be shaved off that ITC share price because of the holding company discount. The third thing, and this was, you know, people just shooting in the air, which was them hoping that, okay, this would be a precursor to a bigger demerger in ITC. There'll be a different FMCG vertical, different, that is not happening. Definitely not happening in the near future. No, because again, when I did do the story about ITC moving the way forward on their hotel business alternate structures, it was also very clear that it is only the hotel business that they're looking at right now for an alternate structure, no other businesses.
Not FMCG.
Not FMCG, not paper, not their agri-business or so to say, because there are a lot of synergies in these businesses. Distribution synergy, for instance, the FMCG business and the tobacco business has. I mean, you see ITC products in all pan shops where you see ITC cigarettes. Having said all these things, so all those who were hoping for that announcement have moved out of the stock as well.
That trade is sort of getting
That trade is getting undone. And the third thing is that whoever buys ITC does not buy it for demerger, definitely does not buy it for the hotels business. There are many other cleaner hotel players. Case in point, something like Indian Hotels. You have other hotel players which have done extremely well. So you wouldn't buy ITC for that. It accounts for just 3% of their overall value.
You know, I'm glad you brought this up because this is exactly what I was coming to. The math around the hotels business. Obviously, these are fantastic properties and they're big, lavish, you know, properties out there. But the question is, what do the numbers really add up to in terms of the value of ITC's hotels business? I mean, independently, I mean, how do you value it in terms of multiples as a hospitality business, and what it means for the parent?
So for the parent, it is less than 5% of revenues.
That's really small.
And around 2-3% of their operating profit.
That's tiny.
Exactly. But it is more than almost 20% of their capital employed.
So it's a capital guzzler.
It's a capital guzzler. It's the hotel business, right? So which is why this demerger was important from their balance sheet standpoint more than their income statement standpoint. So now what happens to the balance sheet? Suddenly you have more free cash flow. Suddenly your return ratios go up, and the free cash flow. ITC has been a very high dividend paying company anyway. You get more cash, you get more dividend. As simple as that. So it was an important.
But we need to watch out for the land assets, like you said. If the land assets, along with the fact that it's a high, high capital intensive business, but we need to see if the land assets also move to the hived off entities.
Yeah, even if they do or not, you know, the value of land appreciates off balance sheet, not on the balance sheet. So if I bought land at 1 crore rupees, even 30 years later, if the value is 100 crores, it does not increase on my balance sheet. On the balance sheet, it's still about 1 crore itself. So historic valuations would ensure that the return ratios increase in their ITC balance sheet, the remainder ITC balance sheet, ex-hotel business. The second thing is that most on the street value the hotel business of ITC in an EV to EBITDA multiple. The industry leader right now is Indian Hotels, the ones that operate the Taj Group. They are trading at 25 times EV to EBITDA.
Okay.
ITC last year they did an EBITDA of around 830 odd crores.
Okay.
Their revenues were close to 2600 odd crores. So give it a multiple anywhere between 15 to 20 times.
So there are a discount to Indian Hotels.
Obviously, because Indian Hotels is the leader, right? Yeah. So even a 20-25% discount to Indian Hotels is reasonable.
Okay.
So it brings you the value of per share basis of the hotel business for every ITC shareholder anywhere between 13 to 20 odd rupees. If you're giving it the same multiple as Indian Hotels, then it goes all the way up to 25 rupees. Okay. No more than that. How much is the ITC share price worth right now? 450 odd rupees. It's by virtue of price decline over the last 2 days, it's gone ex-hotel business already, I would say.
Even before the demerger. That's interesting. Okay, so, this kind of explains a lot of things, and we'll have more clarity as we get to this 14th of August board meeting. Now, X of the hotels business, because you've firmly established why it's not that important from a pure, P&L and sort of return ratio point of view for ITC shareholders. What should they watch out for in terms of the other businesses? I know you've been on the show before and you've been telling us look at FMCG, FMCG and FMCG because that's been really firing away. What about cigarettes? But basically, by the way, guys, the stock has had a dream run in case you were sleeping and you missed it.
60% over the last 12 months.
It's a fantastic ride, and it's the second best performing stock on the Nifty this year. If you're asking which is the first, it's Tata Motors. But the second best performer is ITC. So for a shareholder who's been riding along, that's fine. I guess you just, depending on each one's own interests, it's easier, right? Because you can just choose to stay invested. But for a lot of people who are wondering, what are the next triggers for this business? If I've missed the bus, is it too late to get on? I mean, again, we're not giving any buy-sell recommendations. I'm only asking Mangalam for the fundamental business triggers that anyone interested in ITC should be aware of. So what would those be?
So a couple of things you have to watch out for. As far as the cigarette business is concerned, now it's going into a high base period because the last 4 quarters, we've seen nearly double-digit cigarette volume growths come by. So whether that sustains or not, however, most on the street believe that because of the rational tax policies by the government, there is still a case for more share coming into the formal cigarette market as against the informal cigarette market, which would enable that 8 to 10% sort of sustainable cigarette volume growth. And cigarettes are important, as injurious as they are for a person's health and consumption, and we don't recommend you go ahead and smoke. But from a financial health for ITC, 70% plus of their EBITDA still comes from tobacco. So it is important from a company standpoint, their free cash flow standpoint. The second business that we've been talking about, FMCG.
Once again, what's the volume growth that the street generally is expecting, whether it's this quarter, basically generally this year on this?
It's 8 to 10%. 8 to 10%. 8 to 10% is the volume growth that everyone is anticipating. Not much price growth because not much tax increase has happened out there, and which is what enables volume growth in the cigarette business. Secondly, you are looking at FMCG business. Out there, everyone's eyeing margin growth now because the revenues have come to a certain scale, and ITC has had sweated a lot of assets, distribution synergies, all of them have played out. The margins are close to around 6 to 7 odd percent. And they account for 26-27% of their overall sales, but in terms of EBIT contribution is less than 20%. So once that normalizes, it will be a big valuation driver for them as well, because the hotel business, or rather the tobacco business, trades at a lower multiple than the FMCG business. We've seen that with Hindustan Unilever, and that explains why ITC has always traditionally traded at a discount to all the other FMCG players. And the final point on what people should do right now, remember when the stock started rallying, it was trading at 15 times 1 year forward earnings.
It was the cheapest FMCG stock.
It was the cheapest stock, perhaps, not even the cheapest FMCG stock, which is a steep 30% discount to its 10-year average of close to 23-24 times that it trades at. Right now, after this run-up, the stock is trading at around 26-27 times.
So it's gone above its historic
valuation. Above its historic valuation. The only way you can justify that higher premium is if the FMCG business does well, because that has a, by nature, higher multiple. So is it fair value? Perhaps yes, but is it likely to grow? Perhaps in line with the market, or not show that kind of outperformance that it has shown in the last 12 months or so. Were you buying for the demerger? If you were, then it's a big mistake, because it does not unlock. You don't buy it for special events, especially in cases like ITC, where cigarette is one business.
Of the
Exactly, just 3% of the company.
Yeah.
So whether this demerger was announced or not, my sense is at 500 the stock would have been a little more expensive. So we wouldn't have seen the mad rush to buy that stock. At some point there would have been a bit of a correction, and people would have gone in between 420 to 430, 440 odd, where the valuations would come back to their historic mean.
Levels, yeah.
However, now the reason has come by with the hotel demerger being announced, so some people are taking money off the table, as simple as that.
Okay, that explains what we've seen on ITC in the last 2 days. Thank you very much, Mangalam. Now it kind of puts things in perspective. And lots to watch out for, because as they say, picture abhi baki hai dost. Remember, the board meeting is on the 14th of August. So thank you very much, Mangalam. Good to have you on the show as always.
Thank you. Stay tuned.
All right, so see you again, same place, same time tomorrow. For now, it's a bye-bye.